wealthy, you might be shorting the currency. You might be, buying real estate with a multi-year loan at pretty low interest rates, or you might be doing some sort of arbitrage, for example, where you're actually benefiting from that devaluation of that currency. And that's happening in 160 different currencies around the world to different speeds and different levels and different opportunities. And I think that basically we spent the last several decades financializing the economy. And I think that some of these technologies allow us to shift that pendulum back a little bit towards, in some ways, less financialization and more real world building and kind of sending the incentives back towards those who earn and save.
Well, you just made the case for the harder currency, Bitcoin, by that brilliant exposition. I want to put you in charge of the Fed for a moment, and I'm going to put you before the Congress. And so this is probably why people like you and I will never be in charge of the Fed, because I want you to tell the truth. And if I'm the congressman and I'm asking you as the Fed chair, and I say to you, well, we've got 30 plus $1 trillion worth of debt. Let's forget about the liabilities associated with Social Security or Medicare. Let's just stick to the $34 trillion number. Lynn, can we ever pay back that number, or are we just going to, in fact, continue to monetize the debt by cheapening our currency?
Even if you look at the Congressional Budget Office's long-term projections, it's just larger and larger deficits as far as the eye can see. And then you get that negative feedback loop where if the Fed actually tries to raise rates to slow down inflation, they exacerbate the deficit because there's so much debt relative to the size of the economy, and therefore the interest expense
Right?
goes up.
In the spiral.
And then they issue more debt to pay the interest. And so it's largely the source of the concern now, I would say, is emanating from the fiscal side.
So then the follow up question would be to the very honest Federal Reserve chair: is there anything that we could do? Because we were set up quite nicely coming into the year 2000, where we had a 200 plus billion dollar surplus at the end of the 1990s, and the CBO was talking about a $5 trillion surplus going forward. Of course, we got involved in two wars in the Middle East, a global financial crisis, and other things blew a hole in that system. But is it possible, if I made you the czar and I said, okay, you have control of the federal government, the fiscal side, and the monetary side, could we fix it? Is there a long term plan that we could fix the situation?
Yeah, I think the challenge there is that the fixes are would be.
Is there a restructuring of the United States? Does the United States have to remonetize itself, reset its currency? Do we have to print a $34 trillion coin as an example, pay off the debt? What do you think eventually happens, or is it a gradual slouch downward to further and further demonetization?
So I think there's two main outcomes. If there's enough technological development, so in other words, enough deflationary pressure, things like AI, or making sure we continue to have abundant energy, for example, then you can get a case where the current status lasts a very long time in the sense that deficits keeping running. Every once in a while, they're monetized to a significant degree, and inflation is, largely offset by the gains in productivity. And the downside of that scenario is that those who own financial assets keep benefiting and benefiting and benefiting, and you keep widening this existing gap we have. Basically, you continue the past 40 years, and you probably get more and more political polarization until you get some extreme nonlinear events. Basically, the rate of those starts to increase decade after decade, or at least the probability of those starts to increase decade after decade until you get unforeseen circumstances. That's kind of one scenario. The other scenario is that if, yeah, I would try to own whatever's scarce because in either scenario, you should benefit in the long term. So things like Bitcoin, equities, cash flow producing businesses, ways to earn a good income, high quality real estate that's not in bubble valuations. For example, you buy those things, and to the extent that you use leverage, you use it cautiously and particularly in periods of lower rates, to make sure. Again, it's unfortunately like a game of blackjack, where
Hmm.
generally if you're not using any debt, you're kind of the people other people are dunking on, right? You're the one that's kind of not
Right.
benefiting from the situation. But of course, if you overuse leverage, then you're one of the ones
Right,
that
and you get wiped out.
you get
Right,
wiped out.
exactly. So it's a judicious use of leverage. It could be, fair market value mortgage. You know, you 50% of your house in equity, 50% of the mortgage or something like that, or modest amount of leverage on high quality stocks, things like that. Lynn, we're going to take some questions. I promise you in and out of speak up quickly, and so we're going to wrap in a little bit. But what are your thoughts on the Bitcoin ETFs versus Bitcoin itself? And this is Charles from Georgia. He's 68 years old. The ETFs are easy to use, says from New Jersey. Have you seen any? I'll let you start with that because I think you're better equipped to answer it than me.
So she's in New Jersey. I'm in New Jersey as well. And so we have the benefit of pretty good money as far as global monies are concerned, and we have the benefit of a good housing market and an S&P 500, right? So our money's not as broken as others, and our savings, we basically monetize the equity market for our savings. That's what a lot of us do. And so it's easy for us to look around and say, what's the purpose of Bitcoin? I think when you look at the use case for it, you have to look at the global marketplace. There's 160 different currencies out there, and many of them do not have attractive equity markets or real estate markets for people to invest in. The question of liquid savings is very hard. I have a friend who's a physician in Egypt, and he literally stacks physical dollars like under his mattress as part of his savings because he doesn't have a local equity market that's really attractive long term. He doesn't want to hold his local currency. So it kind of comes down to, he's got a little bit of real estate, but that's illiquid. And so it comes down to dollars, gold, countries that have that problem. And so I think that the main answer I would say is think globally and think about a kind of a board with 160 different currencies. Most of them are rapidly devaluing. Most of them have capital controls to varying strengths around them. And things like Bitcoin and stable coins give people more options to self-custody money, to receive money they want, to go around financial borders and things like that.
It's fascinating. You're saying a lot there, and I'll say something that you're saying subtly, a little bit more profoundly. What Lynn is basically saying is that there's a natural political proclivity to devalue the money. It helps politicians in the short term to do these things, and a result of which is happening all over the world. And so it's happening less so in the United States, even though we just described how much it is happening here. And so for places that are less stable than the United States, Ashley, we're seeing a lot more use cases than you would typically see in a place like New Jersey or New York. I think we got two more questions. Lynn, why don't we go there? There's so much tension in the Middle East between Gaza now with the proxy fight with Iran. How do you see this impacting U.S. markets this year?
So one of the main questions is to what extent could it impact inflation? Because that can impact forward expectations of Fed policy and bond rates, which can then impact equity valuations, for example, or even things like Bitcoin valuations. But let's focus on stocks and bonds here. So different tech platforms out there, there are some of these open source equivalents. And to the extent that those centralized ones get disrupted or changed or kind of centralized more and more, I actually think that increases the case for some of these open source ones. And then as well as things like Bitcoin that actually allow for the payment to occur with these different things. I mean, one of the cool things I did was, speaking of Bitcoin and foreign markets, I used the Africa Bitcoin Conference app. Um, uh, it was last year, and so I'm in this app. It's a wallet, and you could use Chat GBTC. Chat GPT with this app payable in Bitcoin without a subscription. And so basically it democratizes access to some of these AI things that in recent years have otherwise taken subscriptions. So I think that those technologies can kind of get a leg up should we see some longer term disruption. But yeah, this year I wouldn't expect much.
Okay, so Lynn, where can we find you? Okay, we have this brand new book out.